In this video today, we are going to be looking at 6 reasons why you should consider investing in the stock market. What's going on, people? Hope you are all doing well. Welcome back to my channel. Today's video, we are going to be taking a little segue away from property and focusing on investing in the stock market, because I want to be a little bit more smarter with my money. I want to save my money to give it the most potential in terms of saving the amount of cash I need to get on the property ladder. And when I think of investing and the stock market, I automatically picture Leonardo DiCaprio in Wolf of Wall Street and middle-aged men from privileged backgrounds, when in fact, that is far from the case. Investing has never been easier to get into or more accessible for people like me and you who are beginners and also have a minimum amount of money to invest. You don't need thousands of pounds sitting in your bank account ready to put into the stock market. You can invest with pocket change, and it's easy and simple to do. What I'm currently doing is investing using a platform called Trading 212, and I allocate a certain amount of money each month to invest in stocks. So before we get started, I just want to caveat that I am not a financial advisor. This is just purely my humble opinion on money, so please take it with a pinch of salt. So the first reason is inflation. Now, inflation is the rate in which goods and services increase in price over time. This is the reason in 1980, you could buy a property on average for £20,000. £20,000. Whereas in today, the average property price is £240,000. This is why it's not easy getting into this game. Now, the current rate of inflation in the UK at the minute is 0.5%, which is relatively low. But that rate is set to increase over time. Banks will start printing more money, which will increase the rate of inflation, which means the buying power of your money, of cash sitting in your pocket, will decrease. So if I have £1,000 sitting in my pocket, I keep it there for 5-10 years. In that time period, my £1,000 will not be worth £5,000. It will be worth less than that, depending on the rate of inflation, which is why investing in stocks, you are able to beat the rate of inflation. The second reason is you'll be able to grow your money a lot faster. If you take the S&P 500, which is basically an index or a market tracking the performance of the top 500 companies in America, historically, that has given a return of 10% per year. Now, 10% is a much higher rate of return compared to if your money was sitting in the bank, as it'd probably be losing interest due to inflation. But be aware, the stock market, the higher the return, the bigger the risk. Also, investing in stocks and mutual funds, you'll be able to grow your money at a lot quicker rate due to compound interest. Albert Einstein, one of the greatest mathematicians of all time, once said that compound interesting is the 8th wonder of the world, and those who understand it, earn it, and those who don't, pay for it. So what does this actually mean? The process of compounding basically means the money that you earn from interest starts making interest. So your money starts making money on top of money. So let's take a quick look of an example of compound interest and how it can help grow your money a lot quicker. So over a period of 20 years, if I invest my money with a rate of return into the stock market of 10% with an initial investment of $5,000, investing $100 per month, not taking into consideration inflation and tax, my initial investment of $29,000 will compound due to the interest making interest and make me an investment total of over $106,000. That is how powerful compound interest is. You don't even have to lift a finger. Your money is working for you 24 hours a day, 7 days a week. My fourth reason is diversifying your portfolio, which basically means investing in different assets to minimize your risks, essentially not putting all your eggs in one basket. You can diversify your portfolio by investing in stocks, mutual funds, bonds, property, commodities such as oil and gold, and even art. If you're not diversified, you may also miss out on growth opportunities in a different asset class that you're not exposed to. COVID-19 and the national lockdown is causing havoc with the economy. People are losing their jobs, being made redundant. It's a very, very difficult time. So if all my money was invested in property and my tenants were unable to pay their rent, and suddenly there's a boom in technology stocks because people are working from home, they're spending more time on their devices, I've not only missed out on rental income because all my money was tied up in property, but I've also missed out on that opportunity of growth because my money was not diversified in other assets such as the stock market. Dividend payments. Some companies reward their investors with dividend payments on a quarterly, monthly, or even an annual basis. Now, a dividend payment is basically a distribution of the company's earnings. Now, some companies like Coca-Cola have a relatively high dividend yield of around 6 or 7%. Other companies choose not to reward their investors with a dividend payment. Investing in dividend paying stocks is a great way to earn passive income. And my final point is liquidity. And what I mean by liquidity is that stocks are easier to transfer into money rather than property. When you are selling a property, there's a lot of hoops that you have to run through. You have to consider surveying fees, you have to do legal fees, and this takes a long process. You need to have a buyer in place, and that buyer has to have the financial capital to be able to purchase the property. It could take up to 6 months to sell your property. So if I needed cash quickly, stocks could be a great way to transfer your assets into cash. Now, I hope this video has helped you to understand why you should consider investing in the stock market and how investing is more accessible and easier to get into than ever before. Now, I appreciate that some of the terminology and jargon can be quite off-putting, but I will be doing some further videos into investing for beginners and speaking to experienced investors. So make sure you click the subscribe button and click the little bell notification to make sure that you stay up to date with all the content around investing and obviously property as well. So if you are interested in investing, I highly recommend Trading 212. It's a very easy and simple way to start investing. It even has a platform where you can simulate investing without using real money. Using the link in the description, you and I can both earn a free share, so make sure you check that out. But as ever, thank you for listening. Make sure you like, comment, and subscribe to show your support, and I'll see you again next time.